These renewable energy tax credits, now they've been around for a long time. In one form or another, they date back to the early 70s, right, of trying to incentivize investment in renewable energy. They've changed in amounts and importance and significance throughout the decades here.
Welcome to Truly Passive Income. I'm Neil Henderson.
And I'm Clint Harris. And our guest today is Eric Gorton. Eric is the Vice President of Professional Services at B10 Energy. After starting his career as an auditor with Deloitte, Eric transitioned to commercial real estate, where he specialized in acquisitions and equity raising. Now at B10 Energy, he helps high net worth individuals and corporations substantially reduce their tax burden through renewable tax energy credits. Did I say that right? Renewable energy tax credits. How about that? With expertise spanning accounting, real estate, and renewable energy, Eric brings a unique perspective on sophisticated tax strategies for passive investors. Eric, thanks for being here. How are you today?
I'm great. Thanks for having me. Excited to talk with you guys.
Absolutely. Thanks for being here. So this is something that we haven't jumped into a lot. There's discussion about it, and you always hear it on the periphery. I think that some of it gets really interesting as you talk about different presidential administrations coming into play and what were the rules, what are the rules going to be, and things like that. But just take us on a walk here. You've had a pretty interesting journey from traditional accounting at Deloitte to commercial real estate, now renewable energy tax credits. What steered you in this direction because of the opportunity?
I've always, tax and accounting was as hard as it is to say and understand for some people. It's been a passion of mine. It's not a passion for everyone. But I took an accounting class in college, and the professor, it was like 800 or 900 students in the class, and he made accounting cool. And somehow he did that. And it was just, I fell in love with it. He's like, hey, this is the language of business. He was a commercial real estate investor, and really just got us excited about accounting. And I chose to go to Deloitte because they had, out of the big four at the time, in the office I worked at, the Boise office, they had the most real estate and construction clients, that I could work on. That was what I really was interested in. Loved it and got into real estate. And you see how the two tie together, tax and real estate and investing and what's there. You start getting into cost segregation studies, and capital gains. And it's just, it's been a passion of mine. I love both sides of it, and at B10, our existence, the reason why we're here is we want to help. We call it, the builders, the creators, the innovators of the world have the resources they need to continue to build, create, innovate. And that's a passion of mine of helping people. And we do it through tax and accounting.
Gotcha. So this seems like one of those things where I can't say, hey, Eric, in 10 seconds or less, tell us everything we need to know about renewable energy tax credit, right? But with the idea of understanding that what you do is probably going to be talking past some of our listeners, including myself. Tell us what renewable energy tax credits are, and just in layman's terms, what we need to know and how are they being implemented?
Yeah. So to start with, a tax credit, right, it's an incentive from the government. They are trying to incentivize a certain behavior by giving a tax credit. And a credit is a dollar for dollar offset of your tax liability, versus a deduction that reduces your income, right, that you're taxed on. So these renewable energy tax credits, now they've been around for a long time. In one form or another, they date back to the early 70s, right, of trying to incentivize investment in renewable energy, right? And they've changed in amounts and importance and significance, throughout the decades here. But right now, we have an opportunity where, with the passage of the Inflation Reduction Act, it made renewable energy tax credits transferable, which is a big deal because in the past, to take advantage of them, you had to have an equity ownership in the renewable energy facility, right? So solar panels, a solar farm, you had to be an owner of that. Now with these tax credits, I can build a solar facility that generates a tax credit, right? So that's the incentive. The government's saying, hey, if you build this solar facility, and this is an investment tax credit, we're going to give you a certain percentage of your tax basis back to you in the form of a tax credit, right? I can use that, or now I can actually sell that to an unrelated party for cash. And so I can sell that tax credit at a discount. So if you're looking to pay your taxes, and let's just use easy numbers, $500,000 tax bill, and you have to pay $500,000 in taxes, I can sell you a $500,000 tax credit or worth of tax credits for $450,000 or $420,000. So you actually pay that tax liability with less money. So that's why they're back in the news. This really in 2023 was the first time these were transacted on, where people were buying these renewable energy tax credits at a discount. And so I think that's one of the main parts that's new and has gotten them, like I said, back in the news cycle. People are talking about them again. But at the end of the day, it's just a tax credit. It's an incentive to work with and invest in renewable energy across the country.
And are these typically industrial scale renewable energy project?
We specialize in commercial solar, right? And so, but commercial solar can be any size that you want it. A lot of our projects are sub 1 megawatt. So they're rooftop units for a single building, right? That provides energy for that building.
Is it one time? It's like this tax credit that's coming through. This is one time, or this is renewable, like over a period of years, or year over year. Or how does that work? Is it so? If it's one time, I'm assuming well, first of all, let me let you answer that, and then I got to follow up.
Yep. So there's two types of major renewable energy tax credits. Section 48 is what's called your investment tax credits, and Section 45 is your production tax credits. So you choose between the two. So the investment is based off the investment you make in the asset, right? So that's a one time. So I build $1 million solar facility. I can get a tax credit really from 6 to 70%, depending on what qualifications I meet. And that's one time for that asset, right? The production tax credit is based off what that asset produces, right? You can't double dip and take both. So there's actually, there's two, right? So most of these, so for every asset you own or build, it can produce those tax credits there.
So if it's something you're going to sell, you probably want to take the upfront single, versus if it's something you might hold long term, it might be worth it more to just let the production base continue to kick out.
Yep. And just want to point out, with selling it, there is a recapture feature. And so us as owners, we can't sell it for the first 5 years, or part of the credit will be recaptured if we sell within the first 5 years.
Got it. So just like an accelerated depreciation recapture, that kind of makes sense. And they put a timeline on it. So there's people out there searching a marketplace and basically saying, hey, this family office is going to have $10 million worth of tax liability this next year through passive whatever, but we can go buy $7 million worth of tax credit on the marketplace, and we can knock 30% off of our tax bill. Is that what's happening?
Yeah. And usually you see the prices, in the mid to upper 80s to mid 90s, kind of depending on timing as far as price per dollar of that. And I do want to point out, so these, like you mentioned, these tax credits are passive in nature. So they offset tax derived from passive income activities for an individual. So that's what we see. The biggest users of them are individuals or entities that have significant passive income, or C corporations, because they can use them. They don't distinguish between passive and active.
So we're clarifying, so our listeners understand, this is not going to offset my W-2 income, no matter how big. I make $500,000 a year as a cardiologist. I'm not going to, this is not going to offset that income. But it will offset the income from the passive investments that I have in the stock market, or no?
So investment income and portfolio income, as far as like the stock market, those do not apply. And so it's your passive activities such as real estate, rentals, rental income. That's what you can offset the tax derived from those activities, or really, your passive ownership in other businesses, right? So K1s that you receive that you don't take an active stake in, so that passive income. But that's the taxes that these can offset.
Eric, I want to basically throw a word problem at you here. Neil and I and our general partners and our team are sitting on about 600,000 square feet of rooftop space. We buy old Kmart's, grocery stores, warehouses, textile mills across the Southeast, typically buildings that have been empty for 8 to 12 years. We want the nasty building that nobody else wants, that we can get for pennies on the dollar, right? The ugly duckling that we can turn into a golden goose by taking that unused giant big box retail building with very little appetite. We convert that to a different asset class that's now based upon the net operating income, and the value shoots up. And a lot of times that allows us to recapitalize by way of a refinance event and hold it long term, which would make sense for something like a tax credit that is a 5-year hold. we can recapitalize by way of the refinance and have liquidity without selling the asset and continue to hold it long term. So that wouldn't like be necessarily a hindrance there. I got 600,000 square feet of rooftop that we're looking at without an inch of solar on any of it. It obviously seems like some low hanging fruit. And we've been looking at, well, maybe we can get federal dollars to help install it. But there's the backside. That's the offensive side, right? There's a defensive side here in terms of tax liability on the back end. So with a developer, say for instance, with a bunch of rooftop, how do you go about this process? Are we connecting with a solar installer and then somehow looping you in at some point as a consultant on the project as to how we're going to move forward with this? How does B10 step in and help us create that value?
Yeah, great question. Great question. We do it in two ways. One, we're an owner of solar facilities across the country. And so we directly own them. So one thing that we could do is like with our development partners. And I always tell people, so I'm on the tax and compliance side. So I'm I'm not swinging any hammers out there, putting up your solar panels, right? So I'll make sure it's compliant. But we have development partners, right? EPCs out there that can do it. So one way is so we approach building owners, right? And say, hey, we can put this solar facility on your roof, right? We will pay for it. You don't pay a dime, right? We can calculate what are you paying right now in energy costs? What does this cost you per year, right? We can beat that rate by installing solar on your rooftop. And then you sign a power purchase agreement, right? Or a PPA for 20, 25 years. We have a rate, we have an escalation in there. What we typically do is, hey, if you're paying X, we'll come in at Y, right? And then if you're seeing a 3 to 4% annual increase in your power, maybe we set it at 2.5%, right? So you have that. So you get the benefit of cheaper power and you're not out any money to install that on your roof, right? So we own the facility. You're paying us for the power that you use for the next 25 years at a discounted rate. So you're just saving money on energy consumption. If you wanted to do it yourself, right, and say, hey, well I want to install it, I want to pay for it, you can do that. And what we do is we do work with solar facility owners and we do all the due diligence on it. And we make it easy for you to have an offtake where we would go under contract and let's just say, hey, we will buy or have the right to assign the tax credit that's produced, and we'll go under contract with you at a certain rate, right? And we know we have buyers that we can assign that to that want that tax credit. And so you don't have to go out there and find a buyer for it. If you want to monetize it and you're like, hey, I don't want to do all the work, I don't want to find people to buy it, we can come in and help you monetize that tax credit.
Interesting. What's the smallest roof that's worth it for you guys?
So really, we do all size, and ours is much more in the kilowatt hours that it produces or the megawatt, So you look at that. So, I mean, we do 0.5 megawatt. We'll do even a little bit smaller than that as well. But 98% of what we do is under 1 megawatt in size on the rooftop and some ground mount stuff. But so like I said, I'm trying to think even square footage of buildings. We only deal with the roof. So but we're up there. But
it's tricky, right?
Yeah. But definitely, as you look at that, the ones that you described, we've done buildings smaller than what an old Kmart footprint would be, or those retail buildings that you're talking about there.
Yeah, that's typically on the larger side, but we're anything, 40,000 is probably about the absolute smallest. We got a 40,000 square foot building now. We're just adding a mezzanine, creating 2 floors inside. So it's going to be 65,000 in rent, but it's still a 40,000 square foot roof, right? So we have to navigate that. Okay, so Eric, to take that a step forward, let's say we're sitting on a decent sized portfolio. I've got about 12 to 13 properties right now and a couple more in the pipeline. Is that something that we can be like, hey, here's this portfolio. Take a look at all this. Tell us what's the recommendation. What does B10 think the highest and best use of this rooftop space is? And then we kind of walk through that scenario. Is that how that works?
Yeah. Like I said, and what we would do, we'd bring in our development partner, right? The contractor that's going to build this and have him run it through his paces, right? And kind of put it through, this is what we can do. Take a look at that. I mean, they look at all the past utility bills. I know in some of these, you may not have them as they've been dark, for so long, but gathering as much information as we can and then they put together a proposal and say, hey, this is what, and it's great because it can, on both ends, if you want to buy it, and go through, then we can help out on the tax credit side. We look at that where we're the owner of the system. We don't own the building, right? But we own the system there. And we pay for it and then we just sign a PPA with you. So that would be, if that were the case, we would set up a meeting between you and one of our development partners to go through and see what would be the best use for that scenario.
So given your experience with both traditional accounting and alternative tax strategies, what are some common misconceptions you see among individuals about passive tax credits?
The biggest one is just that passive. They say, oh, great, tax credits. I do this, I can offset this income where, and some tax credits can, right? They're for the different incentives. So this particular one, right, and really identifying what is your passive income and what tax is derived from that, because that's what we're dealing with there, unless you're a C corporation, right? And then it can do everything. Now, the other one is these credits are general business credits, right? Which means they fall into the category that can offset approximately 75% of your tax liability. And you combine all your general business credits together. So if you're a company, right? So research and development tax credit, for example, is a general business credit. So if you're taking that limits the amount of credits that you can use from these renewable energy tax credits as well. But I think that's really the biggest thing is just the understanding of, passive in nature, right? What does that mean? What type of tax can they offset? And then how much can you offset there of your total tax liability?
I have a question as a capital raiser. Like that's Neil and that's our primary job is I've got a sales background with years in medical sales. And was like, my job is to go raise capital for the deals that we do and find the right investment partners whose goals and timelines align with what we're doing. And I know that you got a background as a capital and equity raiser as well. So it's kind of funny. Like I'm coming to the marketplace and trying to establish that. I'm like, hey, we've got returns over here. See if this and this timeline lines up with what you're doing. And you're on the opposite end of the spectrum. It's like, hey, I've got savings over here. You can buy it for cents on the dollar, save yourself some money on the back end. What does that marketplace look like? Like when you guys have these renewable energy tax credits, how are you marketing that? Is there a place where people are going to find those? Or like, do you have a buyer's list? What does that look like from the way that you guys create liquidity events by selling those on the back end?
So there are a couple of marketplaces that have been established out there that just match up buyers and sellers, right? And those have become more prevalent. So those definitely do exist. With us, what we do, because we've been in business long before the Inflation Reduction Act was ever passed, our number one partner that we work with are CPA firms. And so whether that's a specialty that we have, right? And so we always say no one specializes in the entire tax code. Right. And so you have these different specialties. So in the past, we've worked with a lot of CPA firms on things that we happen to specialize in. And so right now, that's probably the number one source that we have CPA firms coming to us and saying, hey, I have a client or clients that need this, that fit this bill. What do you have? What can we do? And so that's much more how we work is on the individual basis. Like I said, most of what we do comes from CPA firms out there. We have some individual people that happen to know us, right, or businesses that they've worked with in the past that come direct. And like I said, for us, even though we work a lot in tax and accounting, we don't do any prep and file, right? So we're not in competition with the CPA firms, and we were designed that way. We don't want to compete. We want to be a partner to the CPA firms. So that is where the majority of I think our clients come from. Is their CPAs familiar with it, or a client brings it up to them, because these are new, right? You look at the transferability of these. The tax credits have been around for a long time. The ability to sell these, really, it's in 2023. Kind of August was kind of the first time you could actually transact. And in 2023 it was really the major corporations out there buying these tax credits at a discount. And so I think where we step in is individuals that you look at 2023, people buying $100 million of tax credits. Well, that rules out a vast majority of the population, buying $100 million there. So, for us to bring that to a much smaller scale to allow people to do that. So it's either the CPA coming to us or the individual going to their CPA or tax professional saying, hey, I've heard about this. What do you know about this? What do you know about me being able to buy these tax credits?
There's two things you said earlier that resounded with me. I love it. First of all, I think that we've probably all had a professor that it maybe didn't depend as much as to what they were teaching, but how they taught it. And I love the fact that guy made an impression on you by saying, this is the language of business. That's super, that jumped out at me. It's like, man, to take something as simple as accounting, but then helping people see past that and understand the value of this is opening up a whole new world. I love that. I'm I think it's so cool that guy's legacy lives that way. And I love that side of things. And then the other side of just taking it a step further is to seeing how you can take something so simple and turn it into something that opens up an entire new marketplace. And when it comes to the renewable energy tax credits, I think it's important to understand something else that you said earlier is that the tax code is all designed as an incentive. The government is using it to steer us where they want it to go, whether it's a qualified opportunity zone to drive money into an impoverished area or reduce taxes if you do this or if you do that, or we're going to tax you more if you don't do this, that kind of side of things. I grew up with a mentality in my house of we need to pay everything we owe in taxes, but not a penny more. And like, just keep our heads down, work hard. And at the end of the year, the accountant will tell us what we owe. I think a lot of CPAs are put in a bad spot is because like they're a victim of how much information we give them. And what you really need is a strategy or a tax strategist or someone that knows how to implement tools like the ones that you're talking about. And if you understand that it's all a game and the government puts little prizes out there if you go in the direction that they want you to go in terms of renewable tax, the energy credits, this is pretty much all at this point. Solar, wind is what I'm thinking. What else am I missing that's out there? Is it things like I know for a while you can get benefit of like putting in the right kind of windows and the right kind of roofing and that kind of stuff. But what are we talking about here? As this turns into a marketplace, obviously it's got economies of scale. So these are bigger projects that are providing greater returns. So when we talk about this segment, what exactly are we talking about these days?
So think about, any type of renewable energy. So solar and wind, obviously, huge components of that. You got geothermal, right? You got advanced manufacturing things that benefit in this process as well. Carbon capture. So all those things there, we specialize on the solar side of it, right? And it is, and just to kind of go forward on your point, Clint, it's an incentive, and people have asked me, well, Eric, with this, what if everyone, goes up and puts up solar facilities across the country? I'm like, then the government got exactly what they wanted. That's what they want, right? And it's, energy consumption's not going down, demand's not going down, right? And this is an area where you look at it, both sides of the aisle are getting what they want from this. So you have the clean energy, you're producing more clean energy out there. A lot of these facilities are being built in maybe what you would call red states, right? And they're benefiting from it, right? Corporations are benefiting from it. And one of the things that's really neat as you look at this, the tax credits, obviously, right, offset tax liability. But when you purchase tax credits, you could also get the advantage of not making your estimated quarterly payments because you have a tax credit to take care of that tax. So if you're going to offset 75% of your tax liability with these tax credits, you make your first quarterly payment in April, right, for 25% of what you think you're going to owe over the course of the year. And then those other ones you're not making because tax credits will take care of that, right? And so, and that's obviously very dependent upon the taxpayer situation, right? Individual versus corporation, everything. But that's one of the advantages, like you said, of just knowing what's out there. And that's why we like to partner with CPA firms of, hey, let us help out the areas we can help you. We're a partner for you. We're a resource for you. We're not going to take your client because even if we wanted to, that's not what we do. we can't. We're not in that line of work. And so we're just there to help you. So a CPA firm, has additional resources and experts in their corner to help out their clients. And that's, at the end of the day, that's why we're here.
Wow. So Eric, I want to finish this off, wrap it up by offering you an opportunity to tell our listeners what would be the best way for them to reach out to you, find out more about what you do, and perhaps access some renewable energy tax credits.
Yeah. No, thank you. Yeah. So, b10energy.com. So that's the letter B10, energy.com there. That gives all of our information. Like I said, you can reach out directly, through that. You can reach out through your tax professional if you want, but we're happy. We love a lot of what we do is education, right? We love educating people. We love working with, even if your CPA or tax professional is not that familiar with it. That's a big part of my job. I'm on calls all day long, just kind of answering questions and going through it because we want people to understand this, know what it is, know where it is in the code. And recently, there's been some tax credits out there that are not legit, that have made the news. And you go through there, and it was, and you're approached by it all the time. And that's why we want people to know, hey, this is where it's in the code. It's not just something that someone made up, right? Here it is. This is not a strategy. Section 6418 oversees the transferability. These are Section 48 in 2024 projects started, here this year, actually 48E or 45Y. But we can go through that and really help on the education side. But that's the best place. Hop on our website there and get in touch with us. We'd love to talk with you.
That's great. Last question from me, Eric. Does it depend on what year you bought the building or when you started construction, or let's say that we're in the process of doing several projects throughout the rest of this year? Is there a time in the life cycle of doing a deal between finding it, going it under contract, doing the construction, or stabilizing it? What is dependent on us taking those tax credits in terms of when we bought the building, and when is the right time for I or someone else in the same space to engage with you guys to learn more and educate ourselves?
Yeah, no, that's a great question, because the tax credits, so they are produced in the year the facility is placed into service. So we're in 2025. If you want tax credits to offset your 2025 tax liability, it must be placed into service before year end of 2025. That's a huge point to remember, because if it gets pushed to 2026, those tax credits aren't produced. You can't use them, right? So you have to wait till you file your 2026 tax return. And these credits are created and finalized when both entities file their tax returns. And so that's a process that we help out with. There's a transfer election statement involved, right? Saying, hey, we're the original owners of these. We're transferring them to this entity or this individual. This is what they paid. We put that on there. Here's how much they're buying. This is what they paid for them. This is when they paid for them. And all that's done through a transfer election statement and filing the tax returns. And really on the side of a building owner, it's, hey, as you get into that, when you start having electricity costs, right? And you're looking at that as, hey, we want to offset this, right? Or we want to build one ourselves, as you get into that process, as you're up and operating, because we put these on buildings that are, the tenants are all there, right? It's an operating building. It's going there. And we just, like I said, primarily we work on the roof. We have some where we need to do a little bit of a ground mount just because of the size needed to offset the electricity use. But really, once you have that, we'd love to get you in connection with our developer.
That's great. This is everyone that listens to this show, or both people that listen to this show. It's the constant. They hear me say this a lot, and it's a who, not how. Right? This is very complicated. It's also very new. I don't need to know how to do all of these different things. I just need to know who's out there that does know how to do them. And for that, we have Eric Gordon. Thank you for coming on today to share your information and to educate us all. And thanks so much. Really appreciate your time.
Hey, thank you for having me. This was great. Really appreciate it.
Thank you so much for listening and watching the Truly Passive Income podcast. If you liked the show, if you think it would be useful for someone else, the greatest compliment that you could give us would be to share the episode, leave a comment down below, or leave us an honest review. If you have any questions, don't hesitate to let us know down below. And remember, with truly passive income comes freedom of time, place, and the freedom to pursue your higher purpose.